In a post over the weekend titled The China Syndrome, we talked about the Evergrande situation in China, the potential of contagion affecting U.S. stocks, and then we looked at hedging stock market risk. And we used the example of a $500,000 portfolio. And one of the comments we got was, this is something that's only available to someone with a portfolio that size. And that's not true. So in this video, we'll look at how you can use the same process to hedge market risk in a $50,000 portfolio. So the first thing we'll do is we'll open up the calculator on our iPhone and we'll type in 50,000. And then we'll go to Yahoo or a similar app and we'll type in the ticker symbol for the index ETF we're using to hedge. In this case, we can use SPY, and that closed at 434.04 on Monday. So let's go ahead and divide 50,000 by 434.04. One thing I've learned doing these videos is you put the dollar amount of your portfolio in first. It's easier to remember the next number. So rounding this up, we get 115 shares. So the next thing we do is we open up the portfolio on our iPhone app and we type in SPY. And then we type in 115. And then here we type in the largest decline threshold, the largest decline that we're willing to risk over the time frame of the hedge. And for these purposes, when you're hedging market risk, unless you have a tighter risk tolerance or a lower risk tolerance, I like 20% as a ballpark figure here based on an observation by Dr. John Hussman about bear market rallies, which was that in a bear market rally, you can often make up a 20% decline fairly quickly. Remember, it takes, I think, 30% to, let's actually work out the math there. So you have 100%, goes down 20. Now you've got 80. To get back to 100, you need 20, but 20 divided by 80 it takes a 25% gain. So his point was getting a 25% gain in a bear market rally is not unusual. But let's say you had a 40% decline. So now you're down to 60. And to get back from that, 40 divided by 60, now you need a 66.6% rally. That's a little less common. Okay, back to the portfolio on our iPhone app. We'll enter in 20% for our risk tolerance. For time to expiration, we'll stick with our default here, which goes out about 6 months, and we'll tap Find Optimal Hedge. And here we're presented with the optimal put to hedge 115 shares of SPY against a greater than 20% decline. And as you can see here, the cost was $2,115 or 4.24% of position value. Now, the thing to remember here is that options contracts cover 100 shares. So because there's 115 shares here, this is an odd lot, what the hedging app has to do is overhedge the 100 underlying shares so that the other 15 shares are also protected. And that can get expensive. So remember the cost here, $2,115. Whenever you have this situation, you should always try hedging the next higher round lot, which in this case would be 200. A round lot is just a number divisible by 100. So let's go ahead and change this to 200. And let's see what the cost looks like. And here, as you can see, the cost is lower. It's $1,666. So if you have a $50,000 portfolio, even though That is roughly 115 shares of SPY. It's actually cheaper to hedge 200 shares of SPY. And you can see that there. And then the other thing we can do is, if you want to lower the cost further, I mean, you could play around with different time frames to expiration. So let's say you're concerned about this Evergrande situation, but you think it's probably going to be resolved by the end of the year. Let's check 12/31, and now we've cut the cost of hedging in half of that. Now it's $808 to hedge against a greater than 20% decline in a $50,000 portfolio. And this will actually give you extra protection because this is based on 200 shares of SPY rather than 115, which is closer to the dollar value of your portfolio. So something to consider if you are concerned about market risk. And just to close on a housekeeping note, we're going to raise the price of this app, the download price, by about a third on Friday. So unless we have trouble getting into Apple to change the pricing. So that's true of the website as well. So that this wouldn't be a bad time to download it if you haven't done so already. All right, everybody, good luck.